Hello and welcome to Pro Trader Strategies Market Commentary for Tuesday, January the 24th. My name is Eric Wilkinson. Some of you may recognize me as the Wolfman from CNBC, Fox Business, or even the Wall Street Journal for my commentary on everything from economic to geopolitical and market analysis. Please keep in mind that everything that we talk about in these daily market commentaries is not a solicitation to buy or sell any of these securities or strategies. At the end of the day, we're here to teach you some different strategies that you can implement into your portfolios, but please do that in your own way. The reason why I can't give you a recommendation on a particular stock or strategy is because I don't know your risk parameters. I don't know what's in your portfolios, and therefore what I'm doing could be counterintuitive to what you are already doing. Having that out of the way, let's get this on. A little bit of economic data today. We're starting to see some flash PMI numbers coming out. We had the French flash manufacturing PMI coming in at 53.4, right in line with expectations. The French flash services PMI came in at 53.9, higher than the expected 53.2. Now remember, manufacturing PMI is Purchasing Managers Index, so this is a forward-looking economic data point, one that I like to look at the most because it tells you what the managers are seeing for demand, and they're looking to ramp up production or pull back on production. Anything above 50 is expansion in that economy, and anything below 50 is contraction. So we're starting to see a lot of pretty good numbers on these PMI numbers as of late. Again, with German flash PMI, manufacturing side came in at 56.5, expected 55.6, slightly higher than expected, albeit on the other side of the flash services PMI for Germany came in at 53.2, just slightly below the expected 54.6. Again, still above 50, showing expansion. Then we also got the European Union's flash PMI coming in at 55.1, was expected 54.8, and the services PMI came in at 53.6, expected to be 53.9. Then here in the United States, we've got our own flash manufacturing PMI numbers. Now, these flash PMI numbers aren't held as in high regard as the ISM, which is the Institute for Supply Management numbers, but still pretty good indication as to the purchasing managers and what they're feeling. So here in the United States, our manufacturing side came in at 55.1, was expected 54.1. We also got Richmond Fed manufacturing index came in at 12 versus expected 2, so that's actually a really good number, actually causing the overall markets to really start to push higher. And then on the other side of the coin, one of the only numbers that really was that bad today was with the existing home sales, came in at 5.49 million units versus the expected 5.54. So existing homes not doing very well as of late, could be due to the higher interest rates. Anyway, on to the overall market. Crude oil pushing higher as the broader market on the equity side are pushing higher, up by about 0.5% in the equities. The crude oil up about 74 cents, but right there at that value area high, which is the resistance level I've been talking so much about. It's really stalled out here at $53.50. It's going to be interesting to see if we can get above that. The bulls need to get above and settle above that line in the sand in order to really have any hopes of creating a new 52-week high. So today is the battleground. It rallied right up there and it's kind of stalled out since touching there. As the overall equity markets are rallying, it's intuitive to see that gold coming off just a little bit after its big move to the upside. I mean, there's been quite a few days of just unabated upside move, and today starting to find a little bit of a chink in its armor, down just about $2.40 right now. Then on to the bonds. Bonds are giving up almost all of yesterday's rally, down over a point today, and again back below that 9-day moving average. You can see that 9-day moving average just kind of turning over. It's looking a little bit more bearish as we go forward. Dow Jones Industrial Average has pierced above that 9-day moving average, which was acting as resistance for the last week or so. Today just blasted above it right off the economic data points that we saw or that I spoke about this morning for the U.S. NASDAQ, again, up 11 points on the day, not really reaching a intraday high today, but if we were to settle here right now, this would be a historical high settlement for the NASDAQ. So that is going to be something they really champion if they can get that done. Then on the mini S&Ps, just keeps, this chart really looks like that rubber band is really getting wound tight. Every other day it's up and down, up and down, up and down. It seems like there should be some volatility in there, but as it just trends sideways, it's pent up energy that I see, and it's looking to snap one way or the other. So that continues to go on. The longer it goes on, the more energy there is being built up in there, and it seems like it is ready to come unraveled at any point in time. This is what I was talking about with the E-mini S&Ps on the daily chart. Overnight kind of put in the lows, but as soon as we started getting out these economic data points, the market has really not taken a breath to the downside. There's been no profit taking whatsoever. Market just unabated to the upside. As for the trades that I've done, I haven't really done anything today, but yesterday I talked about this, that I was looking at Adobe on putting on that short put butterfly that I did a webinar on. I finally got hit on this in the afternoon, and I did the February 100, 110, 120 put butterfly, and that's for every 100 put that I sold, I bought 2 of the 110 puts and then sold 1 of the 120 puts, and that creates that butterfly. I'm looking for a big move, maybe even some expansion, and volatility wouldn't necessarily hurt this one, but I'm looking for a big move outside of that range, and I was able to collect $6.32 for that. So with that market, I'm looking for it to rally up. The way it's moving right now, 116.32 would be my break even. So a couple more dollars to go to get to that break even, and if I can blast even further, I could easily be able to cover this for my percent of max profit that I talked about in that webinar. So go to protraderstrategies.com and check that one out. Also, this Friday we're going to be doing one on the long call butterfly. So continuing this whole series on the butterfly, because it is a very dynamic strategy. And the reason why I'm doing this, it's not one of the ones that I put on very often, but when the stars align in a sense and everything works out for this, it's a good strategy to put on. I talk about how to increase your probability of success with this, because this strategy can be set up for failure immediately upon entry. I don't want to see that happen to you guys. So follow these rules, and this will increase your probability of success with this. All right, so go to protraderstrategies.com, sign up for that, and if you can't take that, take it easy.